welcome to today's fast-paced video, which is called The Trap. I'm rushing to get it to you before CPI. This is being recorded less than an hour before the data release. You know pretty well what I do on my site. Thank you for liking these videos and subscribing to the channel. Thanks for your likes and shares, this helps greatly. Premium clients of Trading Signals, remember that on Monday I had been talking about potential for correction approaching, and this is what we are getting. What had been the sign silver had presented us with to start the week? You got it, exactly. Crude oil, another one of those fine calls for clients. Right on the weekend, calling for an upswing, and you see how well oil stocks are doing as well. When it comes to yields, these are yesterday's closing values, and we see, following Powell testimony, which did not rock the boat much, we see them slowly drifting higher. Bottom line, the Fed is expressing caution in calling it the day on the inflation fight and wants to see more progress, and duly so, because have we seen a pre-election bottom in CPI and then the metric starting to drift higher? Exactly. What do I expect from today's CPI? Headline 2.9, in line with expectations, but on core I'm looking for either them being in line with expectations or even 0.1 higher, which means 3.1 for core CPI is possible. What would bond markets do on that? Yeah, reassess rate cut expectations and deferring those rate cut odds a bit further away. In yesterday's premium article I had been talking SMCI earnings importance, and in yesterday's video, to which I will be linking, I had covered quite a few tickers comparing Max 7 stocks with smaller names such as UPST, A-Firm, and so on and so on. You can review that and see for yourself how these had been doing not just yesterday. SMCI, did it beat on any kind of a metric? Not really, but it had downgraded expectations by guiding lower, which is quite normal behavior if you want to clean the house, and their financing moves hint at interest under the surface, which is what would be lining up nicely with the institutional bid that I had been calling for quite some time already. When it comes to Tesla, which was another stock market request I had been getting, and I was skeptical of this weakest among the Max 7 stocks at the moment to attract a solid bid. I compared even that move to being one approximating capitulation. This was the chart at the moment when I made that tweet, and compared that to how the stock closed. This is not exactly what we would want to see, and it risks breaking below the horizontal support in 330s, low value in this 330s. So that's so much for this stock, and let's move forward to the 4-hour chart of S&P 500. We see constant compression and the deep sea gap being not outdone by the tariffs gap, and even faster closing of the Friday's selling, Friday's bearish positioning that had prevailed prior to weeks already with this Monday's move, and we are now quite sideways, and CPI would deliver that volatility boost. And which way is it going to head if we are going to see figures coming roughly with expectations? Yeah, I will share this with clients, and you have an idea based on your reading of the markets and how I presented that for you already too. Obligatory disclaimer, and let's talk further on.